dollar is not in a good shape as the new trading week gets underway. Friday's jobs report was a major blow to the greenback across the board. Wage growth in the United States slowed more than expected, with the new jobs falling 214,000 and the unemployment rate rising to 4.3%. Given that these numbers are crucial to the Fed Reserve, the outlook appears grim. The reports point to a looming recession, and this is July's data. With more than 6 weeks until the next Fed meeting, the American economy will have to contend with the high interest rates, which the central bank has maintained at 5.5%. Previously, the market was almost unanimous in expecting a 25 basis point rate cut in September. Now, over 70% of analysts foresee the possibility of a 50 basis point reduction instead. Against this background, the US dollar index fell to 102.65 on Monday, hitting its lowest level in 20 weeks. In addition, the greenback continues to weaken against the yen, partly due to the increased demand for the safe haven assets, where the dollar has long been the undisputed leader. Let's take a look at how the economic reports scheduled for Tuesday, August 6, might shift the dynamics of major currency pairs. You are watching Traders Calendar. A high policy rate translates into high prices, loan rates, and other payments. The real question is how well the economy and the population cope with these conditions. While the Fed Reserve might be regretting its decision not to cut rates at the end of July, the Bank of England has shown more foresight. As a reminder, the British regulator lowered its key interest rate by 25 basis points on August 1st. This appears to be paying off, as UK retail sales are expected to rebound from a negative territory by 0.5% on Tuesday, an increase in consumer demand as a sign of a healthy economy. Therefore, if the forecast is confirmed, the British pound is likely to gain value against the US dollar and other major currencies. Rising sales should be supported by growing income levels. If income is low, as was the case in Japan at the end of last year, consumption growth will struggle. Current forecasts predict a 2.4% rise in average cash earnings. This year, the government and employers in Japan have worked in tandem to boost wages to levels almost unprecedented in the past 30 years. And this move allowed the Bank of Japan to end its pre-launched policy of a negative interest rates and shift to tighter monetary policy. As a result, the yen received much needed support, posting significant gains against the US dollar. On a Tuesday, the yen may well extend its bullish run. On the same day, the Reserve Bank of Australia is set to announce its interest rate decision. At its June meeting, the regulator maintained the cash rate at 4.35%. On August 6, the Reserve Bank of Australia is widely expected to hold interest rates steady for their sixth consecutive meeting. Notably, the central bank indicated that it would closely monitor the global economic state, domestic demand, inflation prospects, and the labor market conditions. If the rate remains unchanged, the Australian dollar could lose value or respond to external news. The level of factory orders is a key but slow-moving indicator of consumer demand growth. An expected rebound in German factory orders from a minus 1.6% to plus 1% is a positive sign for the entire Eurozone economy. Supported by this news, the euro-dollar pair is likely to gain upside momentum. The uptrend in the euro may continue following the release of retail sales data. Forecasts suggest that this indicator will increase by 0.3% year-on-year. The European Central Bank appears to have timed its interest rate cut effectively. easing some pressure on the European economy. The Real Clear Markets TIPP Economic Optimism Index, a leading gauge of consumer sentiment in the United States, is expected to rebound from a 44 to an impressive 45 points. Given that the index has been in a negative territory for 35 consecutive months since September 2021, its rise could contribute to stronger dollar. How we're going to be in the short term in financial markets, we will definitely tell you in our news releases. Subscribe to the channel and follow news with us. And see you soon.